Hi, this is Randy Finney with Right Side of the Chart, and this is a midday session or mid-session update, midday also, for Friday, January 31st, 2025, last trading day of the month. And what I'm going to do in this one, I was trying to figure out how to compare in a video, put two charts at the same time. And the problem with that, all my charts, like just about, the charts you're using and everyone are in landscape mode, and videos are typically recorded in landscape mode as well. In a perfect world, you'd have a vertical monitor. You could watch them on your phone, but then that's too small to see what I'm trying to show. Much too small, even a tablet. I happen to have two vertical 24-inch monitors and was one of my multiple monitor setups, but most people don't. So if that was the case, I could stack them on top, side by side, just squishes everything down. So what I'm going to do is I'll toggle back and forth. Again, it's when I'm doing this on my computer, and this is what I did last night. Let me tell you where I'm going with this. They say in trading, it's a good idea to keep a diary, a trading diary, if you want to improve. Talk about what you did wrong, what you did right. And my website, one reason I started this, it is my trading journal. Everything I do, I post online, I do videos, I have screenshots of charts. So all my trades and analysis are archived. So therefore, I like to go back when I see something that reminds me of a similar time, similar technical juncture, whether it's a stock market or any security. It could be commodities, gold, treasury bonds, even individual stocks. So I like to reference past trades. Where did they go wrong? Why did they go wrong? Where did they go right? The big winners. So what I'm going to do here is, lately this has been reminding me, and I did cover in recent videos, told you some similarities to the top back in 2021. That's when the market peaked. Started going down, and the S&P was really right in the beginning of the first day or the first week of 2022, whereas the NASDAQ topped a little bit before that. So what I did is I went back to look at that. The last market analysis I had was that was purely to the stock market, was right here, December 29th in 21. Again, so what I'll do here is I'll play little clips of this video. I've turned on the recording so you can hear what I was saying there, and the audio, that is, to the video, and then I'll toggle back to this chart. But I'm going to have to put these charts full size in order to be able to see both for myself as I'm doing the video, and of course, more importantly, you at home. So we'll see if this works. If I get the video out to you, it's because I think it might come out okay. I've never done this, so let's try that. So I'm stretching this to where we have the chart in full view. Could pull this up a little. Let me resize the charts. I'm going to pause the video and resize them. Okay, what I did in that video back at the end of December 2021 is I started out on the longest term time frames I typically go to, which are monthly charts. When I'm doing these videos, you can usually see up somewhere in the top the time frames. That's monthly right there. There's an M, on a monthly chart as well. And so what I was highlighting back then were on QQQ, and then I went through the other indexes, were this uptrend line. I'll get to that in a second. I since extended it. It actually comes all the way back here. You had this little COVID right there, was a quick snap down below it and a recovery back with all the stimulus. But either way, it's the same trend line I was highlighting back then. It's still on my chart now. And so talking about on the monthly time frame, needing a solid break, a monthly close below that chart. And again, I'm going to get to that in a second. And the other thing I was highlighting on the monthly time frames is just how darn well this PPO works as a trend indicator. And I've covered this many times. If you followed me for any period of time, I cover this on multiple time frames. Depends on the security. I always look, make sure each security, meaning a stock, a commodity, it needs to behave well to the PPO histogram. I don't apply all my trend indicators equally to all securities. Stock market's one thing you have to look at, and sometimes I'll tweak moving averages or certain indicators. But over the years, I've covered this many times, how bull and bear trends are, it's a great, we call it a 401k, instrument for long-term traders that don't want to day in, day out, flip long, short. Can't do that in a 401k. They won't let you. Most of them will, have active trading restrictions. But that's it. It captures bull and bear trends. I've covered this many times. I've been covering it recently, especially when you get the crossovers. It typically signals a trend changes. So, at that point in time, I'll play the video here.
WM, or the Russell 2000. So here's our big bull market primary uptrend line from 2008, QQQ, every other index, bottom in March 09. And again, from this charting perspective, forget about that bear market and any others that we had there that were drops of over 20%.
I'll talk about the PPOs here.
And again, this is kind of a recap. So hopefully you've watched some of my recent videos. I talk about the PPO histogram just being a great trend indicator and showing you these when the PPO crosses over on the monthly time frame, you get these red bars down here. Those are the periods of the corrections, each and every one. They're labeled here 26%, all right, 24, top to bottom. Back and looking at
let me mute this
100,
here.
it did not.
All right, I don't want to go through the whole thing. I can put a link to this video if you want to see it. And that's how I recommend it. Is I'm muted it now, but you can see I go on to talk about being on alert for, and not only an alert that it appeared imminent. If I continue here, I'll just play it as I talk. Again, I've muted this now so you can see the what's going on down there. But in that video, again, it's easier to sit through and watch this video and then just toggle on a monitor if you have enough room. Put your charts above, go to the same chart with the same security, and see where we're at today, because that's the whole point of this video. As I often say, history often repeats. I'm sorry, it's more of history may not always repeat, but it often rhymes. Now, there's one more thing I'm going to say about this. I'm just going to give a little disclaimer here. The problem is the similarities are almost too close, and I have a little bit of a problem with that, because in the past, when I noticed a top or a bottom in a security and there's so many similarities, quite often it doesn't play out, at least not exactly the same. You get a little flush out move first, and the reason is I think all I see it, too many people see something and act on it. That usually doesn't happen. Again, with that being said, sometimes it does. My take on technical analysis, I didn't invent it. When I discovered it and learned about it, and to this day, I was amazed with it back then. And the longer I do it, I never failed to be amazed on how well it works in predicting movements and projecting where a stock's going to go, or in the market, or any security, when it's going to turn and change course. I mean, that's what we do a lot. My style is very aggressive. It tends to be catching tops and bottoms. Sometimes I'll play breakout continuation trades with the trend, and then other times I'm catching turns in the market. And those are where the big profits come from, because it's the trend traders, by the time they realize that a trend has changed and they've been in the same mode, because if they're a trend trader, they're going to buy dips. And at what point do they realize they've lost so much money buying dips? And at that point, they start shorting. But then in the market in recent years, by the time those trend traders flip to bearish, they start shorting and the trend's already reversed back to bullish. So again, I use multiple time frames to kind of get in front of these changes, but that's it. So what I'm showing you is what it looked like then, and I was harping on that not only to be on watch for, but it looked imminent. I said, once you can see that, once the PPO starts going down or up, it doesn't take an expert market technician to see which way. Oops, I hit the play button there. Which way these things are going to go, and that the bearish crossover looks imminent. So now let me jump fast forward back to today. Where'd it go? Here we go. This is today's chart. This is QQQ. I'm going to move this over a little bit. Let's grab this. We don't need that much real estate. Let me zoom in a little bit. Okay, so we were just looking at the end of 2021. That's the uptrend line I had. There's the PPO. And I also went on to say in this video, I think it was when I was covering SPY, that SPY was in much better shape. QQQ, the bearish crossover, appeared imminent because the histogram bars were so low. Again, I was doing the video right here. The very next month, we had the biggest drop. That drop wiped out. You can see here, these are monthly candles. So 1, 2, 3, 4, 5, 6, 6 months of gains for those that are bullish and buying at that point were wiped out in literally 1 month. That's what you can see with the big red candle. So we wiped out the previous 6 months of gains, and at one point we went all the way down much lower. We went down to wipe out, stop out all the longs, down to about 8 months out. Okay, so that's the sell signal. That is a textbook sell signal. Again, it was covered at the time, and I followed up with this video right in the beginning of January and gave you my long-term targets for the bear market, which I think T3 was hit when we hit there at that low. I have them on a different board, I think on the weekly chart. So we had multiple high probability long-term sell signals that put us and put me and in the site. We're in the mindset of a new bear market has likely begun, a primary trend change, and that was certainly a bear market, a drop of well over 20% in both indexes, and that's it. So it ended with you can see now we have this primary secular bull market uptrend line. All right, let's jump over to SPY real quick. Okay, this is going back to the end of 2021, and there it was. I had this uptrend line, beautiful bearish rising wedge, the bearish PPO cross, the crossover, as I mentioned at the time. SPY, the S&P 500 looked better. Remember, this market's all about tech. Tech dies, the market dies. If you're not aware of that or you don't know that, you need to really step back, paper trade. It's all about tech. Maybe one day something else rules the roost, but everything is about tech, and it's all right now about AI and things related to AI. The big Mag 7 that are spending gazillions of tremendous amounts of money on it, NVIDIA, all that. When they break, the market breaks. Now they've already started to crack, just like 2021. I talked about that. The Nasdaq and big tech peaked before, and we had what we have now. Breadth improvement, the S&P going up, financials, everything else going up. But it was a setup for the biggest drop and most profitable bear market to trade since COVID, and one that was much easier to trade. If you blinked, you missed the 36% drop when COVID hit. Was there. It was a big drop, but about 6 weeks. So anywho, I highlighted a sell signal come on this, and I mentioned that by the time you get a crossover, especially on the SPY, because the PPO was, the histogram bars were higher. That's the differential between the two lines here on the PPO, that the top will be well in by the time that crossover comes. So that was then. Let's jump forward to now. And again, I'm just showing you comparisons here. Okay, this was then. Did I have, let me go back. Hold on one second. Okay, yeah, my apologies. I had that on a different board. I had it it was this same trend line. I had it ever so slightly lower like that. And then that was the better fit afterwards. Just excluded the COVID drop. They both did anyways. And there was either way, they came in at the same exact level. That was your sell signal, as clear as could be. Then a couple months later came the bearish PPO crossover. Because remember, when I did the video right here, we had the histogram bars were higher. These will change retroactively. I was doing the video right here. Remember, you don't get the December one didn't finalize till later. Either way, that's where we were right after that. We did get the bearish PPO crossover. So even if you were a doubter back then, we jumped in early short with sell signals on breakdowns on the 60-minute charts and other things. But this was the nail in the coffin, the monthly close. So here we are. That was then. This is now. And you can see we're almost exactly where we were. When I toggle back, let me go back to the other one. That's the other one right there. Was the PPO back in late 2021. This is the PPO now right here in the SPY. And there's our beautiful, well-defined trend line. So that's it. We're in an uptrend. We have the only thing different right now We didn't have big negative divergence back then. We had a little bit here on the RSI highlighted, but now we have it on both indicators, big divergence on the PPO. Hence, I expect an even bigger drop. I expect this primary trend line that grabbed support, ended the bear market back then, to give way, and based on the, again, my analysis on the charts, the scope of these divergences, and that's it. So keep it very simple. Again, I'm just providing analysis. You do you, I do me. But if you want to, if you're concerned about long-term funds, you start breaking these trend lines, and at the end of the month, you have on both QQQ and SPY clearly broken down and closed the month below those. You're probably going to go down to my longer-term targets. They'll probably check it on the 20-month like they did before, 20-month axis support. That's this blue line, 20-month EMA. Let me just cover the small caps for you real. As I was just clicking forward, I mean, again, a lot of this was in the video. I addressed like how healthy, the S&P appears to be. It appears to be bulletproof, resilient. It shook off the DeepSeek thing, already. Again, that's how a market looks. It is healthy, and it isn't an uptrend until it isn't. And it's not. That isn't point comes when it breaks down and we close below those trend lines on the monthly chart. That is a major sell signal. So let's go to the smallies. I think I covered that next. Yep. IWM. I just talked about the, histogram poised to cross over, clear, deterioration. Remember, the histogram, what it is, like the RSI, they're momentum indicators. So yes, we're going up, but the rate of ascent or the vigor of the market is slowing. And I've talked about my low volume indicators hitting late last year, and that's why we didn't get a Santa rally. There's a lot of red flags still in this market. And we just need the sell signals to kick in. Went on then to jump down to a daily time frame, and I'll do that here. And I was harping on this as just a major level, a trading range that a downside break would trigger a major sell signal. And then of course I give you long-term targets in IWM as well. And that's exactly what happened. I addressed the false breakout that we had above the trading range, saying that's bearish, that even if we went up there, and I talked about this at the time in this video, that any new highs in SPY and QQQ would still be a marginal new high, increasing the chance that if the markets did punch through, and I maintain that today, I've been saying that, it will most likely fail based on the technical posture. And so SPY gave us that marginal new high. QQQ never did. Again, I'll get back to the current chart. So that was it. That was IWM. I was harping on this trading range for a while. It was as clear as day. And that was IWM. This was it here on the daily. Go back here. Yep, you have to go back a little bit. Remember, I jumped down to a daily chart. That was the trading range right there that I talked about. Trying to square it off here with a square tool. Remember, I have a lot of lines on this chart since that was that false breakout I addressed would likely fail based on the overbought conditions and negative divergence. It failed. We went to the bottom of the range, had one little hurrah off there, and then a breakdown. And as I pointed out, if you missed the breakdown, because everyone was bullish, everyone wanted to buy small caps there at all-time highs, then guess what? They give you a gift and another gift. These are back tests of the trading range. Short. And then boom, then came the bear market. And that ended with, you got it, positive divergence at support. And that's where we're at right now. We fast forward. We've come full circle. Things are a little bit different this time, and that's what I kind of do like. No two tops. I always say there's this I can tell you with certainty. No two tops or bottoms in the stock market are exactly the same. So they have some similarities and some differences each time. This time around, what I'm watching and been talking about here is this uptrend line on IWM. When it was broken a couple weeks ago, I said, not a sell signal, because you have the 200-day moving averages just below. They're going to step in and buy the 200s most likely, as they do before, as they always do in a bull market, or usually do. I shouldn't say always. And then you wait till the 200s go. So that's still the key level to go. The trend line is still valid. We had a little whipsaw through it, but there's enough reactions that I think if it goes again, We come down to the 200s, we'll probably break them in the next time around. Near term, we pop this, we're going to go higher. You can see as I zoom in, you got a little resistance here. And so if the S&P or NASDAQ pops to new highs, I'll probably take the smallies up a little bit, but so far they've peaked back here. And now that I'm on the daily charts, back then, this is the late December 2021, I highlighted the trading range that we had in SPY with a breakout that I talked about would be most likely a failed breakout due to these big negative divergences. Again, just from my experience, more often than not, much more often than not, breakouts that occur to new highs with overbought conditions and negative divergences fail. They only go so far. So those are breakouts that I either don't take or I turn around and I'll actually short them, betting that they will fail. And so that was then, and then I kept harping on this as a big level right here, 453.75. I covered that in the video. And that was then SPY. And we go back to that point in time. I got to move this chart to zoom in for you. That was it right here. That was the 473. That was the level. There was the trading range. Here, I'll zoom in a little tighter. And that was your previous high. There was a breakout. Same thing. We had the trading range. The breakout failed as expected and anticipated. Breakdown, backtest, rejection. Tried to backtest it again there. Also set up a downtrend line in which to short every rally back to, which we did. We gamed all these divergent lows in there on the site. Each one was set up as a counter trend trade for active traders. So we juiced, the bear market. If you did the active swing trading, I mean, that's what we do. We swing trade. These weren't even, I wouldn't even call it active trading. They were all double-digit gains. I posted them as swing trading ops, not just, quick. They weren't 5-minute charts or 15-minute charts like I've been covering lately. These were on the daily charts, positive, aka bullish divergence. And so that was then, and this is now. We have this nice little trading range right now. You can see right here, this was a previous all-time high in SPY. Take that line across like I did back then. We had a breakout, successful backtest, successful backtest, successful backtest. Brief whipsaw below. It came in and caught a trend line, and that's what we're watching right now, this trading range. Let me turn off all the lines to make it real clear. So this is it. This was our all-time high. This is our, let me give a square tool look better. This is our trading range. We had that one little whipsaw through. A downside break will be bearish. Any upside break, I don't believe is going to go very far due to these same nearly identical technical postures, big negative divergence, overbought conditions, and that's that. I'm going to turn back the volume on the video and hit play here and just show you back then with the
More
SPY.
importantly, probably the thing I'd put the biggest emphasis on, and I've been talking about for a while, is that 453-ish. I have it at 453.75. That's that previous all-time high there. We had a pullback, then we had a breakout. We successfully backtested it right here recently and again. And then we had this range we set up, and I talked about this. Now, on face value, a breakout above the top of the range would be bullish, and that's what we have right now. So if you want to be a purist and take the charts for what they are, then you go long here on the breakout, and you can put a stop somewhat below. I talked about this before. I said I could see the possibility of another new high, because if we got it, we're guaranteed to have divergence, and that's what's happened. So
okay, let me pause it there. I go on to say that that's why I expected the breakout to fail. So this is a case where, a mechanical trader will wait for a break of that support. Let's say they, to see what I see. But, you can get ahead of it, expecting a breakout to fail. And then you go a little short-term trend line, a 60-minute chart, which I'm sure I would have covered back then. And I moved these lines in that video and mentioned, and that's what I did. I picked up these lines. If I hit play, you'd see it, and moved them. Said we had a divergent high, like the divergence I've been talking about, and we simply extended it. And then from there, it did go on to play out. But let me jump over forward to QQQ. Let me find QQQ where I covered that.
What if there was a way to know if a stock...
There it is. YouTube is aggressively cramming, trying to force everybody into YouTube Premium now. The amount of ads you get on the YouTube videos is insane nowadays. Hope that comes back to bite them. I know they're trying to make money, but boy, they are aggressively. I had to fast forward that ad that clicked on. All right, so QQQ right here. Let's hit
Above
play.
it,
Basically
breakout.
highlighting right there. You
Let
had
me
the
draw a
same
line
thing.
there.
You had,
And
again,
then
this is back
two
then.
successful back tests
Two
so far,
lows right
but we're
there.
still
I talked
grinding
about
around.
the trading
Unlike
range as
SPY,
well.
QQQ has
Hold on,
not
let me
taken
mute
out
this.
that high.
We're both talking. Me back then and me now. That's it. So talked about the trading range. Talked about how I went on to say how any new high will be. I'm trying to probably back then grab my line tool. I could do now and tell you that any new high will be a divergent high. So that was then, this is now, and it would likely fail. And then your sell signal comes on the bottom of the range. Okay, sorry, that was then. This is now. What do you have? You have a trading range. What do you have? You had a high that came a few months back, just like then. Back then, that high was in, what was it, November, October? Let me see. Yeah, November. I knew that. So we had a high that came in November. Remember, I was doing this video in the beginning, that video back then in the end of December. And there's our previous high, which could very well mark the high just like it did then. The SPY, remember, just made a new high. QQQ didn't. So QQQ and SPY are identical, almost identical then, with SPY, QQQ peaking out a couple months ago, getting very close like it did then, but nothing more than just being at the back to the top of the trading range. And then this is the big level. So if you want to be that second mouse that gets the cheese and you're not aggressive, you wait for a break of that. If you are aggressive, you can anticipate any breakout will be a failed breakout. I've also, we're short as a long-term trade from the bearish engulfings. Remember, we had on the weekly a few weeks ago, and those haven't been negated. The trading plan for that trade, this bearish engulfing, is a stop above the top of there. I just, again, want to reiterate that if we do pop, because if all eyes are seeing what I'm seeing, or enough eyes, and they're comparing 2021, late 2021 to now, the powers that be, which are the nefarious forces, the big, huge, funds and trading desks that have the money to move the market, they might try to pop it. Otherwise, we're going to have a near identical repeat. And to me, again, it's all about, I see the upside appearing very limited right now. And you can see there's a beautiful uptrend line too on my weekly chart of QQQ right there. So the way I told you since last week or last couple weeks, because of the Fed earnings, all that, it's kind of a keep it light market. You can actively trade. I've talked about that repeatedly. That's where most of my profits have come from on the indexes. I've been in active trading mode, and it's been a very lucrative market to actively trade. Swing traders, if you're getting frustrated, well, when you see the breakdown below the range, you have price support right there. You have this trading range, especially on a weekly close. That's going to most likely send us back down for another test, and ultimately I think a break of the 200s based on, again, the near identical posture to back then. This is a weekly chart. This is a clean board right here. Let me update it. Sometimes my lines just disappear, or I have a lot of different boards. This is simple stuff in my opinion. It doesn't always work. I don't want to make it sound like, oh, it's easy peasy trading the markets. No, it is. You got to be on top of your game, and even the best looking setups don't always play out. But this is simple stuff, really, to me. Divergent high, nice clean price. That's really your divergence line, but it also formed a price channel and gives you the negative divergence on a weekly chart. And remember, it can take, and it does, takes months or even sometimes years for negative divergence on the weekly to play out. But when it does, you get the big trends. You would have lost, a third or more of your 401k staying long throughout that bear market. Instead, we turned around and, profited from it. Then you had a beautiful breakout, a downtrend line, big divergent low. So if you just look at the divergent highs, divergent lows, market conditions, breadth deterioration, everything I've talked about that's already occurred. Again, not any recent breadth surge. That's typical heading into a right before market peaks, after a prolonged period of a market deterioration. And I could do another video on internals, which I probably will do soon. But there it is, guys. It's if you want to be patient, wait for that. There, draw that trend line. It comes off the 2023 lows right there. I've harped on it many times. There's our divergence. So a new high will most likely just be a marginal new high. But unfortunately, as confident as I am that that's probably what's going to happen, I've done this long enough to know, and I've traded through blow-off tops. 1999 was the last true blow-off top in the stock market, but I've traded many other securities with blow-off tops. And I can tell you, you do not want to fight a blow off top. And I would be a fool or naive to tell you that it's not possible to get a blow off top. I don't care how bad, how high the Cape ratio is right now, valuations, how poor their turtles have been. It doesn't matter. Anything's possible. Is it probable? In my opinion, no. But the probability is there, even though it's lower than this probability, and I'll react accordingly. So let me try to take this video home. Let me see what else there is I wanted to cover in that. Not much more from there. As I often do when I'm zooming down on time frames, I went to the 60-minute charts. You can see I just toggled down. This is again back then, end of December. This was literally days before. It was a couple months after, but the QQQ almost made it. Fell shy of that previous high again back in November, just like it is right now. If that happens, it'll be almost a mirror repeat of that. The SPY had broken out to new highs at the end of December, but then peaked right beginning of the first year. And again, I'm doing this video because the similarities are just almost uncanny. And again, that makes me a little uneasy, but what am I going to do? Not trade what the charts are telling me to trade, or not share my analysis in the way that I believe, should be shared? That's what I'm doing here. I'm showing you this. Back then, you had these little 60, we were in that same kind of trading range. Was a swing traders market, up, down, up, down. How do you trade the up downs? Look for the divergent lows and divergent highs. That's what they were. This was a divergent high. That was a divergent low. That was a divergent high. That was a divergent low. It's all marked here. This one didn't have divergence, but you had a bearish PPO, a crossover, which I talked about, and a breakdown of a nice cleanup trend line. That was December 2021, and this is today. QQQ looks exactly like this one right here. Boom. Breakdown, it was the same thing. You had a high-level bearish PPO crossover. You actually had a little divergence right after, not on the breakdown. When I was in that video, we just broke down. Then we had a little kickback rally that gave us the divergence right here. This is the shorter term. There's bigger divergence all the way back here that comes. I'm sorry, no, that line should not be there. No, yeah, that's wrong. I'm going to take that away right now. If we make a marginal new high, then I'll put it like this. But right now, this was the last high. So that was the last divergent high from these lines here. That shows through the daily, weekly, and even monthly charts, that divergent high. If we make a marginal new high anytime soon, then we'll have it here on the 60-minute chart. We'll have it out on the daily, weekly, and monthly. At no point soon, anytime soon, 3, 5, 8, even 10% marginal new high will not negate or take out the divergence on the daily or monthly or weekly. So, and only thing it's going to do right now is give us divergence again on the 60. But I wouldn't bet on that. That is the ultimate definition, in my opinion, of picking up nickels in front of a steamroller. I would rather be short, as I am right now, waiting to get aggressively short when the aforementioned longer-term sell signals happen, and that will pull me out of kind of active trading mode, more into swing trading mode, sit tight, and hopefully watch the gains rack up. All right, guys, let's see if there's anything else. Let me just toggle back to that. That was QQQ back then. I'm sure I would have covered SPY. There's that again, going back to QQQ. It just looks exactly what happened back here on this break there, and then a little divergent high next. But I'm sure I covered SPY. I went to the futures. I can do that now for you, but it's the same thing. I've been covering the futures quite a bit. I was just talking if we made a marginal new high. Again, all my scenarios were there. And I was looking for SPY, but I guess, oh yeah, there it is. SPY had that same uptrend line right there. And SPY did go on, I think made a new high, incremental new high right at the end of the year, and then crapped out right from the gates early in January. And that was then SPY. This is now. There's that comparable trend line break. There's that marginal new and still divergent high. So far it failed. SPY is a little bit below that previous high. If it happens to punch a little higher, it will not change anything in the technical posture. The cheerleading squad will come out on CNBC with their pom-poms and talk about the new highs in the S&P 500. But, and hey, doesn't mean we can't go up 20% from there. It means I don't think we will. It means I think we'll fail, because it's not going to change the technical posture on any time frame, especially my big ones. 60-minute chart, which we're looking at here. Again, I'll just simply extend that line out to here or here. Now, if it starts to go up a lot more than that, we start taking out the previous highs in the indicators, and we no longer have the divergence, hey, maybe something else is going on. If that happens, I will do my best at the time to talk about it. I'm going to add a little trend line here to watch. So this is, I think, the one that right now will most likely bring in some selling. That's an uptrend line off the January 13th lows. And that's it. And then, of course, bigger picture. Remember, jump out to the daily charts. I showed you the kind of the trading ranges on SPY and QQQ and everything else, and trend lines and all that stuff. All right, let me get the video out to you. I did it, not bad, 35 minutes covering the current charts as well as charts from 2 years ago. Yep, I'll wrap it up here and continue to hunt for trade ideas. Told you yesterday that I closed out, or was it the day before, half my treasuries, and I closed out the other half this morning. They haven't. It's about where they were now. They're down just a little, for the reasons that I talked about the other day. I don't want to. If I get into it too far, I'm going to get buried in the weeds, and we're going to make this an hour-long video. But we're at resistance. We still have the negative divergence on the 60-minute charts, bearish rising wedge. And I think so. I'm now from this indirect hedge. It was a direct play as well. I've sat through this one, even though I was trading the indexes long and short, the NQs. But what I'd like to see and what I can see, what I think is pretty likely, this wedge breaks down, yields start going higher again. That means bonds go down, and that would help be the catalyst, or help as a catalyst to bring the stock market down. So at this point in time, I think it wasn't a lot, but it was, plenty, because I hit it heavy. Made some money on treasury bonds, but I just want to let you know the RR to me is just not very attractive anymore. I was only looking for a relatively small bounce in a larger downtrend anyway. So that's it, guys. I'm going to wrap it up, get it out to you, and we'll do my best to answer any questions today. I'm gonna maybe cut out early today. Just working on a little project at home, but I'll try to, if I see anything big by the close, I'll get another update out to you. This has been Randy Finney with Right Side of the Chart. Have a great day.